Welcome to Wealth Rounds. Today we're continuing our intermediate wealth track with two highly sophisticated corporate tax architecture questions for self-employed high earners. First, if you elect to have your independent LLC taxed as an S-corporation to save on payroll taxes, how does that choice mathematically reduce the maximum amount of profit sharing you can contribute to your solo 401k? Second, how do you locate the exact financial tipping point where your FICA tax savings, corporate malpractice deductions, and retirement tax shelters operate in perfect unison? Let's look at the case profile. The profile is an independent 1099 physician generating $200,000 of gross revenue through their single-member LLC. Reading online that S-Corps are the ultimate tax hack, they make the corporate election and set a reasonable W-2 salary of $80,000, taking the rest as corporate distributions to avoid self-employment tax. The diagnosis is an unmodeled structural conflict. To resolve our first opening question, the moment you elect S-Corp status, your solo 401k profit sharing rules change completely. In a standard LLC, your contributions are based on total net business earnings, but in an S-Corp, the corporate 25% profit sharing contribution is based strictly on your W-2 salary, completely ignoring your distributions and corporate profits. By depressing your salary to $80,000 to save on payroll taxes, you accidentally capped your employer contribution at just $20,000. To hit the maximum $72,000 total limit for 2026, you would be forced to artificially inflate your W-2 salary, which completely deletes the payroll tax savings you made the election for in the first place. This brings us to the answer to our second question. True tax mitigation planning requires holistic entity modeling. The treatment plan requires a precise structural balance. We don't look at the S-Corp election in isolation. We examine your total gross revenue to see if the income volume justifies the corporate wrapper. If it does, the corporate entity is coordinated to pay your private medical malpractice premiums directly, capturing a top-line corporate business deduction, while dynamically adjusting your W-2 compensation matrix to mathematically optimize the exact intersection of FICA savings and retirement shelter space. You don't guess at entity structures, you model the cash flow symmetry. That's how you execute true wealth architecture. Comment S-Corp or send me a message to examine your 1099 entity and W-2 salary optimization for 2026.